Today, we are taking a close look under the financial hood of a real giant in Pakistan's auto industry, Honda Atlas Cars. We're going to give them a full 5-year checkup to see what the numbers really tell us about the company's health.
So, let's get right into it. I mean, you see their cars on the road every single day, right? But behind the scenes, behind the shiny exterior, how strong is the company, really? That's the big question we're going to tackle in this explainer. And to figure that out, we're going to have to put on our detective hats. But don't worry, we don't need any secret sources or magnifying glasses. All the evidence we need is actually hiding in plain sight, right there in the company's official balance sheet.
Okay, so before we can start cracking this case, we need to get familiar with our primary tool, the balance sheet itself. And really, it all comes down to one simple but incredibly powerful idea at its core.
And there it is. This little equation is basically the secret decoder ring for understanding any company's financial story. Assets equals liabilities plus equity. It sounds complicated, but it's not. Let's do a super quick refresh on what these mean.
First up, assets. Pretty simple, right? This is all the stuff the company owns. We're talking factories, machinery, cash in the bank, and even the car is just sitting on the lot.
Next, you've got liabilities. This is the other side of the coin. It's everything the company owes to other people, to suppliers, to banks. Think of it like your own mortgage or a car loan.
And that brings us to equity. This is the real magic number. It's what's left over for the owners after you pay off all the debts. It's the company's true net worth, the ultimate scorecard of its value.
All right, we've got the basics down. Time to start the real investigation. Let's grab our decoder ring and look at the first piece of evidence. What does Honda actually own?
And right off the bat, you see something really clear. Just look at that steady climb in Honda's total assets from 2021 to 2025. This is our first major clue. The company has been consistently building up its value, which is almost always a good sign of growth.
But what are we actually talking about here? Well, it's a mix of things. A huge chunk is in physical stuff, the factories and the machinery. Then there's inventory, which for Honda is all those unsold cars and parts. And of course, you've got your cash and other investments.
Now let's zoom in on something pretty interesting within those assets. In one of the recent years, there was a big 40% jump in their inventory. Now this is a really fascinating clue. It could be great news, right? Maybe they're getting ready for a massive sales boom. Or it could mean they're having a little trouble selling the cars they're making. It's a key detail we need to keep in our back pocket.
Okay, so we've looked at what Honda owns. Now let's flip the coin and look at the other side of the equation. It's time to follow the money trail and investigate what Honda owes.
And yep, just like their assets, their liabilities, their debts have also been going up. But hang on, that's not automatically a bad thing. Companies that are growing often take on debt to help pay for that expansion. The real question is, how does this growth in debt compare to the growth in their assets?
So let's put these two side by side. On one hand, assets grew like crazy to build new things and fund operations. On the other hand, liabilities grew too, but, and this is the important part, at a much slower, more moderate pace. The key takeaway here, what they own is growing way faster than what they owe. That is exactly what you want to see.
So we've looked at what they own and we've analyzed what they owe. We've gathered all our clues. Now it's time to put all the pieces together, do a little bit of simple math, and finally solve this financial puzzle.
And it all comes back to that simple formula we started with. You just take everything Honda owns, their total assets, and you subtract everything they owe, their total liabilities. What's left? That's the shareholder equity. That's the company's real net worth.
And here it is, the answer we've been looking for. This chart right here is the whole story. Just look at that trend in shareholder equity. It is strong, consistent growth, year after year. This is the bottom line, folks. This tells us that when all is said and done, the company's net worth has been steadily and pretty impressively increasing.
So our detective work is pretty much complete. Let's take a step back and look at all the evidence we've collected. What is the final verdict on Honda's financial health over these last 5 years?
Let's break it down. First, Honda is clearly built on a strong foundation. You see that consistent growth in what it owns and, most importantly, in its net worth. Second, their growth seems to be managed pretty smartly, with their assets growing faster than their debts. The one little question mark is that inventory spike. It's not a red flag yet, but it's definitely something worth keeping an eye on. So the final call? The books show a really healthy, growing company.
But a balance sheet only ever tells you where a company has been. The really big question now is about the road ahead.
The entire auto industry is facing this massive shift toward electric vehicles, with all sorts of new competitors jumping into the market. So is this strong financial foundation built to handle what's coming next? Well, that's a story for another day.